I'm Darren Stetzel, Senior Vice President of Asia Agriculture at StoneX, and you are listening to our latest AgriAsia podcast from Singapore, where our local experts join together to discuss the latest market developments from a unique Asia perspective. Today I sit down with Daryl Kryst, our Vice President of Physical Agricultural Markets for the region. Today we will discuss cocoa trade policy, West African supply risks, and retail demand in Asia. Please do follow or subscribe to the podcast wherever you are listening so you do not miss new episodes. We have some truly insightful markets to discuss every single week, and you wouldn't want to miss one. Let's get into it. Hi Daryl. Can I just start by asking how the current trade policy climate is shaping Asia's cocoa flows?
Well, tariff debates and quota tweaks are nudging trade lanes towards origins, which have clearer policy paths and friendlier rules. For our Asian buyers, that means keeping parallel quotes with the West African region, and for alternative regions out of Southeast Asia and LATAM, and timing their hedges around policy headlines. This will help with stripping out volatile price swings. Well, with that said, how did speculative position behave relative to the flat price move?
Well, when futures rally without a matching rise in managed money longs, it typically hints at a risk premium or supply-led move rather than a momentum chase. That can set up and produce air pockets on negative headlines, which is important for Asia to stagger hedges and avoid concentration in a single board month. I wanted to ask you also, I know that you regularly look at certified stocks in many markets, notably coffee, sugar, and cocoa. So for cocoa specifically, what are the registered stocks signalling, and why does this matter for Asia?
Yeah, of course. Well, lean exchange stocks reduces the market's shock absorber. This will lift nearby spreads, and it will cause replacement risk. Asian grinders and confectioners face higher spot differentials and may need to secure physical cover earlier, or alternatively, accept tighter shipment tenors.
Yeah, I think then it's important to look at the implications of tightening certified stocks for grinders in the Asia region, because the tighter buffers push up prompt differentials and then keep butter ratios supported, which can compress margins at heavy plants in Japan, Korea, and across the Asian region. We expect more conservative run rates, opportunistic spot buying, and closer coordination between procurement and sales calendars as a result. I just wanted to ask you as well, actually, going back to the fundamentals, how are Western African supply risks filtering into Asia's sourcing decisions?
Yeah, well, weather variability definitely plays a big part. Harmattan intensity, rainfall distribution, and disease management, especially the CSSVD. These sustain uncertainty on both the main and mid-crop flows. Asian buyers are diversifying origin mix, and they are building optionality in contracts to manage any potential shortfalls.
Interesting. So because of that diversification in the origin mix, are we seeing substitution or reformulation in Asia's chocolate market?
Yeah, we're actually seeing reformulation across the board. Value segments in China, India, and Indonesia are leaning on compound coatings. Smaller pack sizes, tighter promo cycles to protect price points. The premium segments hold line, but pass-through costs are more gradual. We will watch the holiday windows to see how volumes are defended across the board. Well, with that being said, could retail demand in Asia soften at current input cost levels?
I think from what I've been seeing on my end is there's some elasticity in price, which is rising, specifically in mid-tier products as shelf prices increase. And at the same time, we're seeing premium categories remain a little bit more resilient, but slower to reprice. It's important to watch the promo intensity, as well as e-commerce mixes and seasonal launches for early signals of throughput pressure. I think it's also really important that Asian importers should monitor trade logistics and security, because the rerouting and higher insurance premium on sensitive corridors, which include the Red Sea and Suez detours, can extend transit times and widen CIF spreads into East and Southeast Asia. It's important to keep an eye on container availability as well, port congestion, and any security advisories that could skew landed costs independent of what's happening in the futures market. Can I just ask you, if we start to look a little bit further forward, what's your view of the near-term technical setup and the takeaway for hedging in Asia?
Yeah, well, we'll look for elevated volatility and tight spreads. This means headline risk can amplify moves. Failed breakouts or policy surprises can definitely whipsaw positions. We'll use staggered entries, collars around shipment months, and avoid overhedging distant tenors without any sort of physical alignment.
Thank you, Daryl, for taking the time to join us this week. One thing we really like to ask all our experts on the podcast is that, following our conversation on what has been happening in the market, what are the key market topics we should be keeping a close eye on in the weeks ahead? I think, for me, some of the key areas include policy headlines. Exchange stock changes are very important. It's also good to kind of consider the butter powder ratio. And also, in the current market where we've seen such volatility, managed money positioning is very important. What are your views on this?
Yeah, for sure, I agree. Well, policy headlines affecting origin differentials and tariff treatment, that's good to look at. Exchange stock changes and nearby spread behavior, especially with replacement risks. Butter powder ratio is always important, especially in cocoa in itself. Managed money positioning versus any sort of flat price for any air pocket risks and any implied volatility changes. And for FX, I mean, we always have to look at FX, especially in the soft commodities.
That's great. Thanks a lot, Daryl. Thanks a lot again for joining us and sharing your expertise this week. Wishing you a really, really fantastic week ahead.
Perfect. Thanks, Darren.
This podcast is for informational purposes only and is not a recommendation to trade, an investment research, or an offer to buy or sell any financial product. It does not take into account your particular investment objectives, financial situation, or needs. The trading of financial products such as futures, options, or swaps involves a substantial amount of risk and may not be suitable for everyone. Past results are not indicative of future performance. You are advised to perform an independent investigation of any transaction to determine whether any transaction is suitable for you.